What's going on, guys? It's the Bulls and the Bears here with a midweek update video. That should have been done yesterday, but I was busy. So you're going to get it Thursday morning instead, or maybe early afternoon. So, market is coming down, and the positions are down as well. The P&L is down. I mean, the count was over 24,000. Now we're below 23 right now. Market's open, by the way, so because it's 10:15 in the morning on Thursday morning. So we can take a look at some live movement. But I figured I'll just start with the account details. You can look at the positions window right here. I have a Pfizer cash secured put still working, which is going decently. But given how the market's coming down, we'll have to see how that works. It expires tomorrow. Intel, 160 shares. I don't believe anything new has happened there. I don't know. I don't believe so. And then ZIM, 180 shares. I actually just bought 20 shares today. Because I hit my target. So I have 20 more shares to go. Then I'm at a full 200 shares, and we'll combine all the cost basis and figure out what levels to sell calls on. Because I think I'll move to sell calls once I'm at 200 shares of ZIM. Even if it's like monthly calls, I have a whole plan B pretty much for stocks that are underwater. But we'll get to that later or at another time. So that's the positions window. Let's just go over to... There we go. The charts. So here's ZIM. We'll just start with ZIM, I guess. It's already on the screen, god damn it. So 15-minute chart zoomed out. I'm going to hide myself for now so you can see the price on the bottom right. The green lines are where I've purchased shares. So self-explanatory. The orange line down below is my final lot of 20 shares that I want to buy on ZIM. Then I'm at a solid 200 shares and I can sell 2 covered calls against it going forward. I'm not going to add anything more than 200 shares. The blue line at 26.53 is the cost basis on the 80 new shares that I just bought. Should ZIM decide to pop right now, not hit my final 20 lot target, and it decides to rip up to $27, I'll sell all 80 new shares at 26.91 at the yellow line and sell all those new shares for a profit of like $30. And again, that'll equate to what I could have gotten by selling a cash secured put. You know, the $30 is equivalent to the premium I could have got by selling a put. But instead, I'm buying shares slowly, being very conservative in this downtrending market. But I don't expect that to happen. I do expect to get filled down here at some point, whether it's today, tomorrow, next week. And then I'll have 200 shares. And then... let me zoom out here. I'll combine the two averages that I got going on here. The top one, way up here at 36.79, light years away from the current price, is the average cost basis on the first 100 shares I got on this thing, because I got assigned on a cash secured put several weeks ago. So when I finally get these last 20 shares, I'll average these two blue lines together and have a average cost basis on 200 shares, delete all the other lines, and then work with that one average, which will probably be somewhere around $30, which is great. Because 200 shares of a $30 position is a quarter of my account, so that's perfect. But ZIM is looking rough, and that's just part of the game. I mean, the wheel strategy, you're gonna lose money on it in a market that's selling off. I mean, just like, where else are you going to put your money, right? Unless you're like straight up day trading. Yeah, you can make a profit every single day. But if you're holding anything, whether it's long-term investing, the wheel strategy, like your 401k or whatever, buying bonds, like, you're losing money, right? So I think this is a better way to lose money, in my opinion, than just buying a full lot of 100 shares at one level rather than, you know, getting paid to do it by selling cash secured puts or just slowly averaging in. And once I'm averaged in, yes, I haven't been collecting put premium on this downwards move because I'm buying shares instead of selling puts. But once I am in, then I'll start selling calls. And my plan B for something like ZIM that's way underwater, because I know I'm not going to be able to sell weekly calls against it and get solid premium for it, I'm probably going to move to monthly calls for monthly profit. Because 1 week is just not going to give enough premium. But if I go 1 month call, I might get like $40 to $80 in credit or something like that. Maybe like $100 on 2 cover calls, and for 30 days. and I'll just realize that $100 as profit on the month rather than adjusting my cost basis. So I'm going to make this position, although it's underwater, I'm going to make it make money for me by selling month-long calls. So I'll make $100 a month on the position. And same thing with Intel once I get that position up there. So let's go to Intel right now. I'm at 160 shares of Intel, and I'm guessing I did buy 40 shares this week, considering where the line is at 27.01 was my last add of 40 shares. And looks like we were hitting it today, this week. Monday, we hit it for the first time. So I definitely bought 40 shares on Monday of this week. And now we're a lot lower. But that's okay, as expected. We have our final ad at 25.82 coming up for another 40 shares. Then I'll have 200 shares of Intel at an average price below $30, which means it's less than a quarter of my account. And that is perfect. So keeping the ratios solid. Like the rule of thumb of no position being more than a quarter of my account, that is solid. We're sticking to that plan, that rule. But it's going to be underwater just like ZIM. If I get filled down here, I'm just going to enter it off to the side. 25.82. So if I get filled at 25.82, my cost basis on the full 200 share position is going to be 27.82, which happens to be one of the levels that I bought a lot at right here. I think this green one. So I'll make it white for now. The white line would be my cost basis on 200 shares should I get filled down here. And then we'll go from there. So I'll be $2 per share underwater at that point with my full allotment of 200 shares. So, you know, it is what it is. Again, just like ZIM, I probably won't get weekly call premiums that are justifiable to sell. So I'm going to go to plan B and sell monthly calls on Intel as well. It's closer to the money than ZIM is, so I'll probably get more than what I would on ZIM. ZIM, I expect to get maybe like $80 to $100 a month. Intel, probably closer to like $120, $150, which means I could bring in over $200 a month. I can make these two underwater positions pay me over $200 a month. And like I said, I'll realize it as profit as opposed to adjusting the cost basis. So that's plan A is you sell calls, you adjust the cost basis. Plan B is you sell monthly calls for monthly profit. Because if I didn't do that, then I wouldn't realize any gains really for the month, assuming all of my account was tied into positions like this. But so far, these are just two positions. I don't have any other shares in any other names right now. I did play with DocuSign. Go to DocuSign now. So I deleted all the lines off of this one too, but what happened this week? I had 20 shares of it at 52.09. Put a line there right now, 52.09. I must have bought these on Friday because we hit this level for the first time on Friday of last week. So I bought 20 shares. I must have covered that in my weekly recap. I'm guessing I already forgot. And then the very next day, or, you know, the next business day on Monday, we had a massive push up. We gapped up, we ripped up. And I sold my 20 shares for a $30 gain. Right up here. Somewhere up here. Boom. Done. So the 20 shares I bought on Friday were immediately turned around on Monday for a gain. And that's it. Not holding any shares anymore. Because it didn't really move much lower. You know, I'd look to buy shares once it makes a new low, maybe down towards like 51 or 50. But instead, we kind of remained sideways, or you could say we kind of trended up the rest of the week. So didn't buy any new shares there. However, I did decide to sell a cash secured put on DocuSign. That is correct. I sold it at the yellow line down here. I still have my orange lines. I'm going to get rid of these for now because I don't have any position on it, share position on it. So I did decide to sell a cash secured put yesterday on this. No, it wasn't yesterday. It was Wednesday. On this big push up right here. So on Tuesday, we pushed up, we gapped up, we pushed up. I was like, damn, this is looking strong. I expected SPY to have a somewhat of a bounce day. So I'm like, okay, I think this is a temporary bottom. We might start to rally here for a little bit. Bear market rally. Let's sell a cash secured put on DocuSign. Because at this point, with the move up, and already being Tuesday, you know, one less day in the week, let me sell a cash secured put on it for this Friday at a level that I think is safe. not only is it safe, but worst case scenario, if I get all 100 shares down at 48 this week, I'm confident that that'll be a solid position. Like, I'm confident that the price wouldn't be so far below 48 that I wouldn't be able to sell calls against it. I would expect it to be relatively close to 48, that I could get some nice call premium, and I would expect a bounce, honestly, because a DocuSign at 48 in 1 week is pretty damn low, in my opinion. You know, that would be way down here. I would expect some type of bounce. So I was happy with the 48 strike, and so I sold it for $30. So, you know, pretty low premium. That's because I wanted to play it safe by going out of the money, far out of the money. I could have got like $50 if I was a little closer, but I didn't want to do that. In fact, I was kind of sticking to my latest rule of getting premium that equates to a 30% annualized return on the stock. So let me just bring the calculator over again. The $48 strike means I would have to buy 100 shares at 48, which would be a cost of $4,800. That would be the cost of the position. What is 30% of that a year? Well, that's $1,400. What is that 30% per week? So divide that yearly number by 52 weeks in a year, and you get $27 or $28 a week would equate to a 30% annualized return. And I got $30 for the put. So the premium I received on the put is more than a 30% annualized return on the cost of the would-be position. So I was happy with that. And doing it that way allowed me to get a little bit further out of the money than I normally would have been. I would have loved to take that $50 premium $1 or $1.50 closer to the money, but with my new rule in place that I'm happy with, it allowed me to go even further out of the money at a safer strike. And considering that DocuSign has been up here this whole time, I actually closed that put today. This morning I closed it for 5 cents. So sold it for 30, closed it for 5, netted a $25 profit on that cash secured put. I figured, 83% of the premium, I'll take that. Considering the market, let's just go to SPY quickly. Considering SPY is already losing its gains from yesterday and breaking through the lows, and in fact, we're at new lows right now. My goodness, we just had lows that broke June lows, and now we just broke the lows from this week. So new 52-week lows essentially is what I'm trying to say, and I'm just worried about what DocuSign will do if this really decides to crash. So close the put there. Pfizer is another one. This one is another cash secured put that I sold last week that I rolled into this week, and that one is struggling. We're at the level right now, but I'm actually feeling pretty confident with this one. The 44 strike is the one that I chose. We're at 44 right now. I got $36 net credit for it, so if I do get assigned, my adjusted cost basis would be $43.64. So like way down here, $43.64. Wow, it's way down here. This is what my adjusted cost basis would be. So as long as Pfizer is above $43.64, which is essentially my break even, then I'm good. I'll take the assignment at $43.90 and immediately be up like 30 cents per share. So I'll take that. And the way it's been holding up, we might not even get assigned at all, but again, I have until $43.64 before this begins to be like an underwater position, so I feel all right there on Pfizer. I wouldn't close it early until the put gets down to like 6 cents, and right now it's not there. It's probably at like 40 cents per contract. I need it down to 6 before I'd close it. So I'm probably going to ride this out until tomorrow, and we'll see what happens there. Las Vegas Sands is another one. This is a put that I sold last week, just like Pfizer, and it sold off hard. It went way below the strike, like right here, clearly. So I decided to roll it. I rolled it down and out. I had the 36.50 strike, like right at this level, and I rolled it down. I rolled it down to 36, and then I rolled it out to this week, which was an extra week because I sold it last week. And we had a massive gap up, and we sustained these levels around 40, 39, and this put just decayed like crazy. And I was able to close the position for $33 profit, which is only a 53% capture of the net premium, which isn't a whole lot, but $33 as a dollar amount, I'm happy with for sure. It was definitely way more than 30% annualized return on the name because we're below $40, 30% annualized on that. or even just the strike that I chose at 36, that's $20 a week. So, and I got 33, so I'm happy with that. So it ended up being a profit of 33. DocuSign shares that I sold was a profit of 30. DocuSign cash secured put that I just closed today was a profit of 25. So now we're up $88 on the week for realized profits. But there was one last thing I did, and I mentioned this earlier in a video where I bought a ZIM put. So I forgot to cover this one while I was on ZIM. I bought a put because I was sick of this thing going down like 5%, 7% every single day. I'm like, if this thing's just going to tank and ruin my shares, I may as well just buy a put, you know, with a little bit of money, just buy a put. And that way, if it does keep tanking like it already has been, I'll at least make a little bit of change on the put. Well, as soon as I did that, it just went sideways for 5 days, of course. And even after today's nice move, I was still down like 30% on the contract. And since it expires tomorrow, I wouldn't break even on it until it got down to like 22.40, which, I mean, now it's tanking some more. It's already down over almost 9%. So maybe we do get there to 22.40, but I wasn't banking on it. I decided to take a $20 loss on it instead of a $65 max loss because I didn't want to ruin all the credit and profits that I've already made on the week. So I'll just eat the $20 loss now. That way I can avoid a $60 loss or $65 loss if it doesn't get down far enough. So that is that. So here is the Excel file I want to show you guys. I threw a lot at you just now, a lot of movements, but here is really the summary of this week, week 4 of September. I had the Las Vegas Sands cash secured put from last week that I rolled into this week that I closed for $33 profit. I had DocuSign shares that I sold relatively quickly, Monday morning, $30 profit there. My ZIM put, which I spelled incorrectly, ended up being a loss. I bought it for 65 bucks, sold it for 45 this morning, lost 20 bucks on it. But you can see I paid 65 for it. So if I had lost all of it, that'd be a big hit, considering I only have $88 profit on the other names. So I just ate the 20 there, and then my DocuSign cash secured put that I opened this week, I closed this morning for a $25 gain there. So we are up $350 on the month. We are up $68 on the week, and we have Pfizer pending. Pfizer net credit of 36 bucks. So if Pfizer expires worthless, boom, $36 straight into this table for profit on the week, and that would put us over 100 on the week, which is fantastic. If we get a sign, though, I do think we'll be in a solid position to benefit from covered calls. We could even sell the shares immediately for a gain, I'm expecting, if we close above 43.64. Right now we're at 44, so I'm happy with Pfizer with 1 day left on the contract, about a day and a half when you count today. In my open covered stock tab, this is where I have the ZIM covered stock because I got assigned on it a few weeks ago. But that's been relatively untouched. This is the section I'm concerned with right now, where I'm building new positions. Intel, eventually I will get this table here for Intel, but because I'm not ready to sell cash secured or covered calls on it because I don't have a full position yet, I'm going to be doing this little table here because it's not a full position yet. So these are my ad spots. First allotment was at 29.36. My last one was at 27.01. And I have one more down, I think at like 25 or 26, somewhere around there. So that's working. ZIM, my additional 100 shares that I'm trying to add up to or build up to, I'm 20 shares away. And the way ZIM is trending right now, I'll probably get it either tomorrow or Monday or early next week for sure. So I have 80 shares right now, looking for 20 more, and then I'll have 200 and I'll add it all together and average it out and update this table. So that's what I'm working with. That's it. Working on Intel and ZIM positions with shares. I'm holding a Pfizer cash secured put, and that's it. Everything else is already closed and done with this week. So that's it. That's the midweek update. We got the rest of today. We got all day tomorrow, and then I'll be back with a recap video to see exactly what happened at the end of the week, exactly where SPY ends up deciding to close. Will we close below the lows, new lows, or are we going to pop back up? Who knows right now? We're already down 2.5%. could get ugly very soon, that's for sure, which is not great for the wheel strategy. But at the end of the day, with the wheel strategy, you got to expect to potentially bag hold names. It is a longer term investing type of tool, the wheel strategy. I would ideally like it to be more of a trading tool, like a kind of like a swing trading, because the wheel is a tool that's kind of sits between swing trading and investing. I would like to lean more towards the trading aspect, where I'm making profits every single month. But in a bear market like this, you got to be prepared to make these names a long-term investment, a long-term hold, which is why you always want to play with names that you like, that you wouldn't mind holding for the long term. That's the whole rule of thumb when playing the wheel. Even if you're trying to make it more of a trading income type of thing rather than a long-term investing type of thing, you still got to be playing with names that you don't mind holding, because that is a realistic outcome. And that's going to do it, guys. So thank you all for watching. If you enjoyed, hit the like button, subscribe for more content, and I'll see you all next time.